an interesting anecdote is that up until last year, we'd had 0 requests for capital market assumptions ever since 2017.
There you go.
And then in the past year, of course, with the
Yeah.
launch of ETFs and of course with the
Yeah.
regulatory pivot, we're now being asked about this on a regular basis. And so we decided to be the first asset manager to put out long-term capital market assumptions for Bitcoin. I think the big
Brilliant.
takeaway here that we have is that we think Bitcoin is moving into its institutional epoch. It's graduating from a niche asset into a mainstream institutional asset. We believe that's going to lead to outsized returns over the next decade. We believe Bitcoin will be the best performing major asset over the next decade. But I think people get lost in the returns and the price targets that we have. For instance, in this report, we believe Bitcoin will hit 1.3 million in our base case in 2035, which of course is fun. Everyone loves price targets, but I think what's more important here is that we believe that will happen while volatility falls over that 10-year period and while correlations to stocks and bonds and other asset classes remain relatively low. And so what that means is that Bitcoin looks increasingly attractive as a component of a portfolio than it ever has before on a risk-adjusted returns basis. So that's what we're most excited about when we took a step back and looked at what Bitcoin could do over the next 10 years.